Over time, money invested in equities tends to outperform cash. And if you consider the destructive effect that inflation has on cash, stocks and shares ISAs start looking like the wisest option if you want better returns.
For stocks and shares, you get a capital gains tax benefit. So basically any gains earned on your investments are completely free of tax. You also get relief on interest earned. For corporate bond investments, that relief is 100%, so there's no tax payable on it. For equities, there's a 10% tax credit, dividend tax credit it's called, which you can't reclaim. So they're not 100% tax-free in that aspect.
Admittedly, the tax benefits for basic rate taxpayers aren't as great as when stocks and shares ISAs were first launched.
The dividend tax credit, it came in about 2004, and basically you can't claim that back. So everybody, whether or not you're an ISA investor, a charity or a pension fund, you receive your dividend net of 10% tax. Now, normally outside an ISA, that's for a basic rate taxpayer, there's no tax, extra tax payable. So inside an ISA, you actually have no difference. You're paying 10% tax, whether or not it's inside or outside an ISA. For higher rate taxpayers, you actually don't have to pay the extra dividend tax, which would be 22.5%. So for a higher rate taxpayer, you get 22% tax relief on your dividends.
Rule changes in April 2008 mean you can move money from a cash ISA into a stocks and shares ISA, but not the other way round. However, whereas choosing a cash ISA is pretty straightforward, how do you know which type of stocks and shares ISA to go for?
The more cautious you are, the more you should have in corporate bonds. Usually a rule of thumb is your age should be a good indicator to your percentage in corporate bonds, although it doesn't strictly have to be true, because if you're more adventurous, you'd have less exposure. But the more you have, more adventurous you are, the more you'd have into things like emerging markets and equities in general.
A self-select ISA allows you to choose a wide range of investments, including funds, commercial property and single company shares. However, for most people, an ISA that allows you to invest in a choice of funds will be sufficient. An IFA can offer you advice, but if you know what you want, a discount broker or fund supermarket is cheaper.
There are two types of stocks and shares ISAs. There's a self-select one, which you can use through stockbrokers, which effectively will buy in individual companies, single shares. They will tend to have an administration cost to set up as well. Or you can buy through an IFA or direct with a fund supermarket or direct with a fund provider.
As with any type of investment, remember that with the potential for greater returns also comes potential greater risk. If you're not happy taking this kind of risk, then stick with a cash ISA.